Hello, everybody, and welcome to episode number 35 of Confessions of a Market Maker. I'm your co-host, Ray, aka All Day Ray, aka Cassius Ray, and I'm joined here by my perceptive co-host, former market maker of 20 years and current day retail trader, a man with a lifetime record of 200 companies taken public. Now, that's more flips than you'll see at SeaWorld. The man who's taught me how to stay on my toes like a prize ballerina. I'm talking about the proper villain, JJ. JJ, how's it
Hey,
going?
good. And of course, those are Versace ballet shoes you're wearing.
You know my style.
Mm-hmm.
And today, our guest is a PhD who's been actively involved in the financial markets since the late 70s, a clinical psychologist, active trader, writer, and researcher, a man who served as director of trader development for Kingstree Trading, and one of the leaders, if not the leader, in trading performance field. I'm talking about Dr. Brett Steenbarger. Doctor, how's it going?
Very good. Thank you for having me.
Oh, the pleasure is ours. We really appreciate you allotting some time for us. Things are opening up back down here by me in Florida. What's the situation looking where you're at?
Yeah, things are opening up in a planned way. And so it's very much stage by stage, step by step.
Mm-hmm.
But in the town in Connecticut where I live, they have blocked off a couple of the main downtown streets, and they're using the streets to put some tables and chairs and let people dine out and be spaced apart. And so, gradually life is getting back to some semblance of normal.
Yes, and thank God for that. And while I have you here, something I've been thinking throughout this whole pandemic, right? How do we approach a situation like this? Obviously, a lot of uncertainty. One news station says this, maybe another says this. How do we stay rational through an event like this?
Yeah, it's a great question. And we stay rational by listening to rational people and
Mm-hmm.
specifically by following people who really are experts in the field. So on my Twitter feed, it's at Steenbab, Steenbab. I try to link different articles and tweets from people who are experts in epidemiology, biostatistics, and so forth. There's so much politicized commentary that's not really helpful. So I like to find the people who are seriously studying this and who don't have a particular axe to grind. And I try to link to that as a way of keeping people informed.
Absolutely. No, great advice. Great advice. Thank you for that, doctor. So I want to start off by asking you, how did you get involved in the trading field to begin with?
I'd be delighted to answer that. Let me just back up if I could, though, and just say, we are getting back to some semblance of normal as we were talking about. But a lot of the experts that I hear from do talk about a potential seasonal component of this virus. And we could be looking at a return later in the year that could be pretty serious. And so we don't want to let down our guard too much. We can't win the trading game if we don't stay healthy, if we don't take care of ourselves. And so that's the number one, number two, and number three priorities. Take care of ourselves, take care of our loved ones, be safe, and then we can do great things in markets.
Absolutely. You said seasonal, not to get down this tangent too much. Seasonal, you saying like, because I've heard a lot of people say like the summer will help slow it down. Is that what you mean by seasonal component?
Yes, there is some thought that it could slow in the summer and then pick back up in late fall to winter.
Okay.
And like in the flu epidemic of 1918, it was actually the second go around that was the worst one. A great number of the deaths occurred not after the virus first appeared, but it was after that second season. So there is the potential for it to come back later in the year in a significant way. So we want to be prepared for that possibility in all respects.
Absolutely. Absolutely.
Yep.
Okay. So
Yep.
now we'll get
And of
into the
course, that would
trade.
have tremendous implications for markets if that were to occur.
Uh-huh.
Very
Yep.
true.
Yeah, so it's a fascinating time, lots of uncertainty, many different developments as far as developing therapeutics, as far as developing potential vaccines. So lots of good things happening, lots of scary things happening.
Mm-hmm.
Back to your question, how I got involved in trading. I had an interest in financial markets really from childhood and hearing stories about markets from my grandfather when I was really young. But
Wow.
I didn't start trading until the late 1970s while I was in graduate school. I developed an interest in equity markets and got started with a very small account and followed markets ever since, but really got serious with it around the year 2000. And then it was in 2003 that, in 2004, that I ended up leaving my full-time academic position at a medical school in Syracuse, New York, and going full-time to work with traders at a market-making firm in electronic futures in Chicago.
Interesting.
Yeah, very. So, I'm interested, Doctor, a little bit about yourself, like as a trader. Maybe give us a rundown, maybe of how your trading style was and how it's evolved over the years.
Yeah, when I first began, it very much was doing fundamental research and buying and selling individual companies, stock in individual companies. And around that year 2000 or so, I met a famous trader, Victor Niederhofer.
Wow.
Learned a tremendous amount from him, including quantitative approaches to trading, really doing market research and looking for patterns that repeat themselves. I also learned quite a bit studying some successful traders, including Linda Raschke, and ended up developing a style of more active trading of the overall market and eventually the S&P futures that looks at intraday patterns in the market based on buying and selling pressure with various unique indicators.
Okay, interesting. You brought up Linda, and why you mentioned her, we had her on a podcast a while back. Love her, she's great.
That's great.
I remember reading an article. I'm trying to remember which one it was of yours, but it cited Linda, and it was a study you guys were doing. She was training. Oh man, I wish I could remember. Does this ring any bells to you, Doctor?
Yeah, we actually collaborated with an academic professor of finance, Andrew Lowe, at MIT, and used some of the people she was working with as subjects to learn about the psychological components of financial markets. And so, yes, we were able to collaborate, and that was a lot of fun. I respect her work tremendously.
Yeah, me too, actually. She's the reason I got a job down at the exchange. I read what she did. I copied it, followed it from Market Wizards, and that's how I got my first job.
Oh, that's awesome. Yeah. No, she's really great, and she pointed to some patterns that really made sense to me. I later did my own research on looking at every single transaction in the market and where that's occurring. Is it occurring at the bid price? Is it occurring at the offer price? Looking at buying pressure, selling pressure, looking for patterns. And that's how I evolved the style of trading that I have now, which really is about looking for when buyers are lifting offers and buying, and can't raise the market anymore. And when sellers are hitting bids and selling, and they can't push the market any lower, those folks are trapped.
Exactly.
And that often leads to really good moves in the other direction. So a lot of the trades that I see and that I place are taking advantage of short-term players who are leading the wrong way.
And it's exactly what we teach in our room. It's I call it inventory correcting. When inventory gets too short, too long, they get trapped and supply runs out, especially when they're short. And and thank you for that S&P tick that you put out. I think it was 3 weeks ago. It's beautiful. On that 32nd, it's wonderful. Thank you so much for that.
That's great. Another influence of mine was Jim Dalton, who does, I think, some really good work with market profile, helping you see key levels, helping you see where that inventory is. There's some really good work with market profile.
He's my spiritual leader. Yes.
Oh, that's awesome.
Oh, yeah.
Great.
I am. I think we should build a statue to that man.
He's great. Yeah, he's really good, and he loves teaching, and he's got a lot to teach.
Just really quick, I know I'm derailing Ray, but Victor Niederhofer, what was it like working with him? I love Education of a Speculator. The Old Man and the Yen is probably one of the best chapters of any trading book I've ever written.
Yeah, his book is.
Read, sorry.
His book is an absolute classic. And you know, I met him and spent time with him. I didn't work for him.
Okay.
But what happened was he and his co-writer Laurel Kenner at the time announced a contest, and you had to submit the best market indicator.
Oh.
And so I was teaching in Syracuse at the time, and I had some free time, and so I put together my indicator and sent it to them. The indicator was a correlation of the level of the Dow Jones Industrial Average with the average beats per minute of popular music. Well,
wow.
Yeah.
All right.
Yeah. And so, you know, and of course, this was around the year 2000, and I referenced the raves in Ibiza, and you know. So anyway, so I pointed out that we were on, you know, the upside, you know, with the beats per minute, but that we could expect a crash, and I compared it to the all-night raves where you finally crash at 4 a.m. on the beach.
Right.
We're not going there. So anyway, he immediately announced that the contest was over and that I had won. Yeah, and so what I won was a visit to his office in Weston, Connecticut.
Oh.
And it was just a phenomenal experience meeting him, seeing what he does, seeing the people he worked with, and and we built a relationship out of that.
Fascinating.
Mm-hmm.
Very smart, creative person, just unusually so.
Mm-hmm. Yeah, definitely.
Doctor, for you, what's your biggest weakness as a trader?
Oh, that's easy, actually. My biggest weakness is that I all too easily get away from what I'm good at. Mm-hmm. And, you know, I love to explore new things, different things. I have a pretty, creative interest. But what I'm good at is the really short-term trading and seeing those patterns with the buying and selling. That's really where I have any edge whatsoever. And as soon as I start to get bigger picture ideas and want to extend my time frame, that doesn't end happily. And so I've found it to be a challenge to accept who I am and what I'm good at, and to make the most of that, and to not try to be more things. You know, you see big moves in the market, you'd love to be involved. That's just not who I am, and I've got to learn to accept that. And over the years, I think I've done a better job of accepting that.
Mm-hmm. Absolutely.
Yeah, focus is so important.
Focus is important, but I do think there's an important element of self-acceptance, of self-understanding.
Oh, yeah.
You know, who you are, what you're really good at.
Definitely.
And typically, really good investors are not great traders, and really great traders are not necessarily good investors.
Exactly.
There are different skill sets involved, and I can make money trading, and as an investor, I can truly shit the bed.
I'm exactly the same way, because I was taught if you ever buy stock, get a discount on it. So, you know, like I'm short already and then looking for a block at a discount. So
Right.
You know,
Right.
so I'm not a good investor because I'm already sitting on your offer.
Right. 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 Yeah. Yeah. So, that I'd say has been my greatest weakness.
Uh-huh.
And it's something that has been rewarding to work on.
Right. Right. And now it's a constant battle, right? I mean, it's not, well, I say it this way, like it's not something that ever goes away, right? Like it's something you always have to keep in mind, or maybe like temper a bit.
Yeah, I think we all get ideas in our head of who we would like to be or what we should be, and that's different sometimes, very different from who we actually are. The really good investors, the people I work with at hedge funds who are really good, they are deep thinkers, and they can really dive into central bank monetary policy and GDP reports and everything that goes into those. And they will notice patterns, they will notice themes, they'll notice pieces of information that other people don't, and they'll develop a whole macro thesis out of that. That's a really unique skill, that ability to do that kind of research, dig deep and think globally. And that's appealing to me, but it's actually not who I am. I'm actually not a real deep thinker. Which is probably why I like to listen to the music of the Ramones.
Love the Ramones.
Yeah. Somebody put something in my drink. I mean, that's probably as highbrow as I get. So, you got to accept who you are. But good traders are fast thinkers and can see things broadly.
Yeah.
And so I can see things happening in different sectors of the stock market, and small caps are doing this, and this is happening in the more defensive sectors, this is happening in the more growth-oriented sectors, and the market's moving higher, and here's what breadth is doing. And I can see that all at the same time and make some quick decisions, and that's what I'm good at.
I would have never guessed you're not a deep thinker. You're a psychologist.
Yeah,
I read your reading, your
right. Yeah. I gotta keep paying that guy to keep writing that in my name.
Is that yeah? There you go.
Good ghostwriter.
It is really funny because I do academic writing, and I do teach in the academic world at a medical center, and so I do have the capacity for that research and that deeper thought.
Yeah.
But not in markets. That's
not in trading.
Strength.
Sure.
Yeah,
okay.
yeah,
That makes
really
sense. Right. Not in trading. Right. Got you.
Yeah.
For sure.
Yeah, absolutely.
Yeah, no, I find that with myself a little bit, somewhat in trading, and other endeavors too. Sometimes I like to, because I'm very curious by nature, so I spread myself out a little too thin sometimes, I think. And I think it's, like you said, and sometimes it can be difficult finding or it takes some time at least to find out where your niche is, and going with that.
Exactly. And that's why with the folks I work with, I emphasize to them, study your winning trades. Really focus on what you do well, learn from that. That's where your talents lie. It's where your skills lie. And that's what you want to make the most of. Your winning trades will tell you a lot about who you are.
I like that. I like that. Yeah.
Yeah. Everyone wants to look at their losing trades and correct their mistakes, and that's all good. And of course, they meet with me. I'm a psychologist. They want to talk about their problems. That's great. But yeah, I tell them to STFU. But no, like, grow a pair.
Yeah.
Oh my God! Oh, thank you for saying that.
That's the old school psychology, right?
Thank you for saying that, because oh my God, I'm 52 and I hear so many people whining all the time, and you gotta try and be nice, but oh dear God.
Yeah. Well, I tell the story. I'm digressing here, but I tell the story when my daughter, my youngest daughter, was quite young. I mean, like young grade school age. I was with her, and I had a really hard day at work, and I said to her, I'm just exhausted. It's such a hard day at work. I'm having trouble just keeping my eyes awake, eyes open. And she looks up at me, this little grade school girl, and she says, "Dad, grow a pair." And you know what? She was right. She was right. I was feeling sorry for myself. Anyway, but people love to talk about their problems and all that. And that is important. I don't mean to demean that.
Yeah.
But we gain just as much by talking about our strengths, what we're good at, what works for us.
Right.
That's really who we are and what we do well. And we want to build upon that.
Definitely.
Absolutely. No, I'm glad you brought that up because I think I do, doctor. I think I definitely do emphasize more on the losers and what I don't do well. And I think that's great you brought that up. I'm definitely gonna focus on that.
Yeah, if I could just jump in.
Yeah, go.
There,
yeah, please.
So, I mean, day after day, let's say you write a journal and you're focusing on a losing trade, you're focusing on a losing trade, you're focusing on this loser, you're focusing on that loser. How is that not internalizing the identity of being a loser?
Sure. Yeah.
I mean, if you keep thinking about losing, that's what you internalize. And so, yes, we do want to correct our mistakes. That is very important. I would say it's necessary, but not sufficient. We have to, we can correct our mistakes. Great. We bring ourselves from a negative to a 0. But to bring ourselves from a 0 to a positive, we have to build on our strengths.
Right.
I completely agree. I always tell people, and people always focus on the mistakes and get sort of twisted and upset. And I'm like, it's a part of the business. It's like a business expense. It's like, if you ran a sandwich shop, would you get worried? Would you get upset if you had to pay the electric bill? Just keep your expenses low. It's a business,
Absolutely. And mistakes and losing trades go with the terrain. There are always going to be setbacks.
Definitely.
You're always going to make mistakes.
Definitely.
It helps being in a marriage.
Well, this kind of leads me into
just saying.
Well, let me
used to making mistakes and hearing about it.
let me ask you this, doctor. What tips or ideas do you have on separating your trading from your personal life? For example, like not letting it affect your mood, whether you've had a good day or a bad day, right? Because neither one is good, right?
That's a good question.
Yeah, it is a good question. And I really do emphasize the importance of having a personal life outside of trading. Mm-hmm. Because if trading is your whole life, your mood, your energy level are just going to go up and down with your P&L.
Right.
And then the markets control you.
Oof.
If you're going to be successful, you have to be in control of your trading. You can't have the markets controlling you. And so you have to have enough areas in your life that can bring you energy, bring you happiness and fulfillment, so that when you go through the inevitable drawdowns of trading, you've got lots of other things in your life to keep you afloat.
Absolutely.
So one way that I've put it in the blog book that I've written, Radical Renewal, which is free. You can get it. It's linked on my Trader Feed blog. But one of the things I emphasize there is that you want a broad enough life so that there's always something more important to you than your P&L.
Mm-hmm.
If your P&L is the most important thing in your life, it owns you.
Yeah.
Right?
Yeah.
Definitely.
Yeah, definitely.
Yeah.
Absolutely.
You can't be successful in life being owned by anything else.
Exactly.
Right.
That doesn't work psychologically. So if you have lots of things in your life that are more important to you than your P&L, I've been married for 36 years. I've got 5 children, 6 grandchildren. I have a teaching career at a medical school. I write books. I have great friendships. I have 4 rescue cats at home. So trading fits into my life. My life does not fit into trading. And that's good for the psychological balance.
Definitely. And what would you say to the people? Because there's people of the school of thought that it's like, oh, you have to be obsessed, because you do several things very well. And there's some people that say oh no, you have to put all yourself into something. You have to be 24/7 trading. What would you say to them?
24/7 trading is a great way to burn out and to have a pretty unsuccessful life in other parts of your life.
Right.
But what I would say, while you're doing trading, you got to be all in.
Exactly.
Yeah. So yes, I would agree with that. You have to be totally absorbed in what you're doing. You have to be totally focused on what you're doing. You can't be focusing on the other parts of your life while you're involved in the markets. But then, the markets close and you've got the rest of your life and you want to be totally focused and totally absorbed with your kids, or totally focused and totally absorbed, with, I don't know, craft beer tasting or whatever you're into.
Yeah, no, I know that totally makes sense, because after 9/11, my whole identity was, around the business and being a trader and successful, and lost everything. And then kind of, it took me a while to get my head straight and, realize that, that I just looked at myself as an abject failure for 2 years, because, and it just destroyed my life, because I couldn't separate it.
And that's a big learning lesson. And it also teaches us about the importance of risk management and why risk management is so important to staying in the game, so we don't blow up, so that we don't go through those harrowing times.
Yeah, and I didn't even blow up. My boss got arrested, so that was
oh
that was so that was, it wasn't even, because I was, trading order flow, so I wasn't, it wasn't a blow up. But the firm shut down, and it was ugly.
The way I like to have it is, if I were to lose every penny in my trading account, I would be a happy, successful person who sucks as a trader. You see what I'm saying?
Right.
Yeah.
It's not a verdict on who I am as a human being. There are a lot more important things that make up a person as a human being. And you might be good at trading, you might not be good at trading, but it can't be who you are, or else the trading controls you.
Very true.
Right. I mean, you find this has got to be, me speculating, doctor, a big problem for a lot of people, just because of the way our society is, right? It's like, what's the first thing you meet somebody, like, oh, what do you do for work? Or what do it's like built into, it's almost like ingrained in society, right?
Yeah. And a lot of our identity is tied up in our work, and our work can be a very important part of our identity. Certainly the work I do as a psychologist is an important part of my identity, but that really speaks to the need to do different kinds of work. And we may do one thing as work to make a living, but there are other things we can work at, whether it's on a volunteer basis, or whether it's the work we do as a parent or a spouse. But we want to be identified with many different roles in our lives, not just our vocational life.
Absolutely. Now, doctor, are you an advocate? I believe you are, of treating this almost like an athlete, right? Trading like we're an athlete, correct?
Well, it depends what you mean by that. Treating it as a performance activity.
Yes, that's what I meant. Yes, as a performance activity.
I totally agree with that. Yes, and the way that we train to be successful as an athlete has a lot of similarities to how we train to be successful as a trader.
Now, athletes talk about, or even you might hear like actors, stage actors, they got like the butterflies before they go on. And if they don't have it, a lot of times people maybe have a sloppy performance. There's something about that feeling that, drives them, keeps them sharp, keeps them focused. I kind of relate that to trading with, like, maybe with the size that we trade. Do you have to trade a certain size to where, you're going to feel it a little bit if you lose? And so in that case, you're a little sharp. Hopefully I came across clear here.
Yeah. There is something called performance anxiety that affects people in all performance fields. It could be actors and actresses. It could be athletes. It could be traders. But if the outcome of the performance becomes so important to us that that's what we focus on, it puts pressure on us, and that affects our doing of the performance. So if I'm a basketball player and there are 5 seconds left in the game and we're down by 1 point and I'm shooting a one and one on the free throw line, the whole game depends on me. where's my focus going to be? If my focus is on the scoreboard, I'm likely to miss those free throw shots.
Mm-hmm.
If my focus is on doing the exact same routine that I've done hundreds and hundreds and hundreds of times in practice and in games of how I shoot that free throw, it's just another free throw. And so for performance sake, we don't want to be too focused on outcome. As soon as we size up too much and we start thinking about P&L, it puts the focus on the outcome. That creates performance pressure, and that can interfere with our decision making.
Correct. Okay, and so let me put it this way, right? Like, because it can't be the same trading sim to trading real money, correct?
Yes and no. I hear that a lot. I'll give you an analogy. So there was a time when doing public speaking, I would get really nervous. Well, then I had to, as part of my stipend, as part of my scholarship in graduate school, I had to teach introductory psychology. And I had to do it Monday, Wednesday, and Friday at 8 in the morning. And all semester long, and it's actually for multiple semesters. So you're teaching every single week, 3 times a week. Well, by the end of it, it was like 150 students in the class. By the end of that time, I was so accustomed to talking in front of big groups that it just became routine.
Mm-hmm.
And now I talk in front of groups and I don't get butterflies. I've just done it so many times.
Yes, exactly.
This talk may work out well. This talk may not work out well. But my life doesn't depend on this particular talk. It's the same thing with trading.
Mm-hmm.
When you've traded enough times, it's another trade. It's just like doing another public speaking engagement.
Exactly.
And you don't want there to be a lot of performance pressure. You want to be able to do what you do well very naturally.
Mm-hmm.
And so I think it can be like sim in that respect.
Sure. Okay. All right. I've heard people say that the human brain is almost wired for us to just be naturally bad speculators. Do you agree with this? And if so, why?
Yeah, in the sense that the cognitive biases that are common to us really do interfere with good decision making in markets, and that has been written about in behavioral finance quite eloquently. That we have biases based on recency, where whatever has happened most recently sticks out in our mind. We have biases in terms of salience, the biggest event that sticks out in our mind colors our next decisions. And so in that sense, yes, we can be wired in a biased way. And a lot of the training that goes into being a good trader is being able to look at each market with fresh eyes and step back from those biases.
Mm-hmm. Mm-hmm. For sure. And so how, like, speaking of bias, when we review our trades, to properly remove bias, to analyze whether the trade was pure luck, maybe it was skill, maybe it was a mix of both. Maybe what are some recommendations when we were reviewing trades?
Well, if we are trading what we know and what we do well, then we have some sort of structure around our trading. We have some sort of idea of what constitutes opportunity, what constitutes good risk reward for entering a position. How do we think about exiting a trade? We have some kind of rules or some kind of experience that tells us what is good trading, and that can guide our reviews.
That's good.
One type of review that I like is where we go over the market with a fresh set of eyes and say, what were the best trades that set up during the day?
Mm-hmm.
And what reasonably could have told me that these were opportunities?
Yeah.
So that you're constantly looking for how the market is behaving, how the market is setting up, which allows you over time to adjust to changing markets.
Exactly.
And allows you to see new patterns. That can be a great way of refreshing your perception, alerting you to new patterns. And then you can see if you've actually traded those new patterns well in your reviews.
I love that because I replay charts, and I'll replay the day and I'll look and see, oh, okay, you know, there was an opportunity here, or, you know,
Exactly.
I missed this sort of thing. And that way too, it helps because I find a lot of people have kind of like a lotto bias. You know, they think the trade has unlimited upside, and you know, then the market comes back on them and they lose money, or they, you know, don't make as much. And I find that bias is just a lack of education of knowing where, you know, that when you have a trade on, you should have some sort of a target.
Yes.
You know, based on structure or whatever you're using.
It's a great point. I can tell you that the worst traders that I have ever encountered are perpetual bulls or perpetual bears.
Mm-hmm.
Yeah.
Oh, yeah.
Because all they're doing is imposing their directional bias on the markets.
Oh, yeah. I see it.
They're not listening to what the market is telling them. They're not really following the market.
No.
The analogy I use, again, in the Radical Renewal book, is that just like a therapist, like a psychologist who's good will listen to their client. A person's coming in to work on their problems. I have to listen to them with an open mind. What's going on in their lives? What's that all about? And how might they be able to deal with it? If I start to impose my idea of what I think their problem is before they even open their mouths,
Mm-hmm.
I'm not going to be a very effective psychologist.
Yeah.
It's no different with markets. We have to sit back. We have to observe markets. We have to listen to what they have to say. Yes. And then we figure out what makes sense, what is setting up. We don't impose our own directional biases, our own needs for activity. All of that are just ways of losing money.
Mm-hmm. Definitely.
Mm-hmm. So, Doctor, a topic that I put a lot of thought to, I think maybe others don't, and I'd like your thoughts on, you know, just general thoughts surrounding it, is trading to win versus trading not to lose.
Right. And certainly especially if we've taken some hits, it's easy to get in that mindset of being so risk averse. We're trading to not lose, and we really do miss out on opportunities that way. I meet with traders who are taking profits much too quickly, and then they're reluctant to get out of losers because they're hoping they'll come back. And that just leads to really, really poor trading. Trading to win is not being focused on P&L, as we were talking. It's being focused on process. It's being focused on what we do well and how we do it. And it's focusing with an open mind, a clear mind. I've recently put together a series of 3-minute videos called the 3-Minute Trading Coach. And in the videos, each video, 3 minutes, talks about one technique that you can master to have an open mind and see markets well. And by practicing those techniques, we can be in a mindset to win, not by focusing on winning, but by focusing on doing the right things in markets, by focusing on how markets are actually behaving.
Makes sense. That makes sense. I just quickly to interject, I because I see a lot of people, you know, who actually don't understand the underlying business that they're operating in, and they're trading and they're making mistakes based on assumptions instead of actual facts about the mechanics of the market. And then they'll say that, you know, they, you know, need like therapy or something like that. Where, you know, I find a lot of that in the retail sort of space, where they haven't taken the time to learn. Like, you know, one person, for example, was, you know, thinking that there was a company that was going to have a short squeeze, but the float of the company was massive and there was no short positions. So there was nothing there and nothing structurally even to show that, you know, that sellers were trapped. So, you know, and then they had this big rant session and things like that. And I don't know about you, but I mean, coming from the institutional side, if I went off and ranted and had a hissy fit, I wouldn't have any clients because you're not acting like a professional.
Yes, yes. And, I see it in traders as well, where they might focus on a biotech stock and they'll say that some announcement came out and that we should fade the announcement. I mean, they haven't studied the drug, they haven't studied the company.
Yeah.
It's bias.
Yeah.
Is what it is. And then you're right, that then the frustration sets in when that idea doesn't work out.
Yeah.
What we want to focus on if we're trading well is what do we see uniquely in markets that others don't see? We can't just be generic. We can't just look at headlines. We can't just look at simple chart patterns. What do we see uniquely that others don't see? Because that's where our edge is most likely to be.
And sometimes it's even just the simple things. For example, Tesla kept going up last year, and it's still going up. And people are surprised that it's going up. And if you look at the way the company's structured, there's no available stock to trade. Most of the float is wrapped up or tied up, and it's never coming out. So if there's no supply, you need supply when you're short.
Right.
It's just those sort of simple, basic things that from the institutional side, I'm like, I'm slapping my head going, what are you people talking about?
Right, right.
Yeah. I mean, it's like you're trying to you're trying to teach an elephant how to swim. It's like, what are you doing?
Right. Even when the company founder is saying that the company's overvalued.
Well, exactly. I mean, Tesla is a living example of the Hudsucker proxy where, the CEO pretends to be crazy and that induces everybody to short it. It's a wonderful way to hold up a stock.
Yeah. There are a lot of leaders I know who do that, but we're not going there.
Yeah. He always tries to bring it down that path. You gotta love Jay. Oh man, good stuff. Because I know, Doctor. I've read you say that it's the whole point of this trading performance psychology is not to change our moods, but it's to build correct habits, right?
Yeah. It's to really play to our strengths, to figure out what we're good at and turn that into a process that is repeatable, so that we can, as consistently as possible, do what we do well.
Right. What are your thoughts on modeling?
The analogy I sometimes use, if I could just jump in, the analogy I sometimes use is between trading performance and sexual performance.
Okay. Yeah.
Okay.
Yeah.
Already?
Yeah. My next video series will be on the 3-minute lover. No, I'm just kidding. Just saying. Okay, so, but what would happen in sexual performance if we focus so much on the end point and this has to be awesome, this has to be the best experience ever, this has to, I have to be bigger than big, I have to be.
Oh my God.
Okay, so the flag is going to fly at half mast. You know what I'm saying? Okay, so when we put pressure on ourselves with sexual performance, that leads to performance problems. And when we put pressure on our performance in trading, it leads to trading problems. And we put pressure on ourselves in golf to putt the right way. We get the yips, and that leads to golfing problems.
Yeah.
It's the same dynamic.
Wow. That was great. That was a great analogy, and that was humorous too.
The nice thing is you guys can always edit out 2/3 of what I say because
we don't edit. So no, we don't edit any of this.
We don't edit.
I don't even know how to edit. Yeah.
Oh dear.
No.
Yeah, that's all right.
Okay.
The listeners get it raw.
What I say. I didn't know that.
No, that was funny. That was great. Oh man. What are your thoughts regarding modeling, automation, AI, et cetera, and using that to combat human weaknesses?
Yeah, it's such an exciting field. Quantitative finance and machine learning, the ability to exploit complex patterns through, computational finance. It's a very exciting field. I know some very creative and successful practitioners in that field, and some of the best returns and funds are coming from that direction.
Mm-hmm.
So it's an exciting area, but it takes a lot of computing processing power. It takes a lot of mathematical ability,
Mm-hmm.
and that's well beyond the capability of the average trader.
Right. Mm-hmm. Doctor, trading can be a lonely endeavor, trading from home by yourself. How important is it for people to have others to talk to, about the ups and downs of trading with?
I don't know any performance field where people achieve elite performance by working by themselves. It doesn't happen.
Mm-hmm.
There's always mentoring, there's always teamwork. You look at how people get to the Olympics, you look at how people get to championships in tennis and golf and whatever the field might be. You always see coaching, you always see mentoring, you always see teamwork, people learning from teammates, supporting teammates. I think that's essential to success. And so that's what you see in trading firms. I work with proprietary traders at SMB, a firm in New York City.
Yep.
And all the traders are organized as teams, and the teams are led by senior traders who have been successful, and they're sharing ideas, and the junior guys are sharing ideas with the senior person, and they review the end of the day together, and they prepare at the beginning of the day together, day in and day out, and day in and day out. And that's how you learn successfully. If you're a trader from home, you can't be isolated. You've got to reach out to others. It could be through an online community, through classes you take, through linking with people that you find to be simpatico online. But you want to be part of some kind of learning effort and learning community.
Mm-hmm. Absolutely. What's the link between trading and spirituality?
Oh, okay. So that's the Radical Renewal book.
Uh-huh.
The link between trading and spirituality is that the big problems of our trading actually are not psychological. It's not like traders have all these psychological disabilities and disorders.
Uh-huh.
Come on. It's that our egos get in the way of our decision making.
Right, for sure.
The enemy of good trading is the ego. Well, how do we get past our egos? That is what spirituality is all about.
Yeah.
Spirituality is about overcoming the ego and finding the soul.
Mm-hmm.
The soul is our essence, who we are. Our ego is what we'd like to be and what others say we are. Okay, we want to move beyond ego so that it's not about P&L, it's not about being, the man. It's about seeing things, responding to things, being in tune with things, and that comes from the soul, not the ego.
Yeah, I noticed that Dr. Van Tharp's last book that I read, Trading Beyond the Matrix, it had a lot of that in it, mastering yourself and consciousness and mindfulness, and it was interesting.
Yes, and we're reading much more about mindfulness and trading, the use of meditation as a tool for traders. Yes, I think it's a much more recognized issue now than in the past.
Definitely.
Yeah, for sure. Doctor, as far as meditation, because you brought it up, I think as far as like myself, what's helping me, and I could be way more diligent, and I think I should because I see the benefits for myself, and I think it's that like just letting the not overthinking, overanalyzing, just executing. You know what I'm saying? You know what I'm getting at?
Yes,
Mm-hmm.
yes. And many times especially for active traders, when we have a performance skill, we don't want to be self-conscious.
Mm-hmm.
We don't want to be self-absorbed. We want to be completely absorbed in the doing of it. Athletics is that way. If we're a soccer player, how do we go to where the ball will be? We're not doing it through any analytical process. We're doing it through instinct that has been gained from many, many, many hours of practice and playing.
Mm-hmm. Yeah,
definitely.
Sure.
Yeah, Ray and I used to always talk about, it's like football players watching game film. and running the same drill over and over and over and over again. So when, that hole opens up, your linebacker, you go plug it. It's just instinct,
Exactly. The repetition is what drills it into our heads. And that's why in sports, you run all sorts of drills all week long, and you do review game film, and you work on your game. As I've often pointed out, in every performance field with successful performers, you spend more time preparing for the performance than actually performing.
Definitely.
In every performance field, you spend more time practicing and more time reviewing game film and more time learning and drilling and working on your game than actually playing in the game.
True.
Good stuff. Doctor, please tell me that the Wendy Rhodes character on Billions is realistic.
She's not realistic.
No.
Oh, thank goodness.
Thank
goodness. Somebody said it. Thank goodness.
Yeah, mainly because she's not good looking like I am. You know what I
mean? Oh, is that it? Oh, Doctor's picky, huh?
Yeah, but, just kidding. This is a drama, right? And it's got to be entertaining. But if you were to do a show with what actually happens with a trading coach and traders, it would be boring for people because we're talking about the mechanics of what they do. We're talking about what's moving, what's not moving. And, you had this position on here. And, okay, could you have expressed it with an option structure? Could you have expressed it as a relative value idea? Did you have the best risk reward here? An audience doesn't want to hear that shit. But that's the meat and potatoes.
Yes.
In working with a portfolio manager, for instance.
Yeah.
And so, I don't fault the show in that respect.
No.
But it's not really what goes on behind closed doors when I meet with traders and portfolio managers.
I just find it interesting because the show is they're actually getting sued by I don't know if you know her, but she's claiming they stole her identity. She's another trading performance coach, so I just thought that was interesting. I didn't know how.
I did hear that, and she is a trading coach, and supposedly they did consult with her. I don't know the details, but supposedly they did consult with her before making the show, and she felt that they used the information and didn't properly credit her. Yeah, but I don't know the details of all of that.
Neither do I.
In my case, if they had the Wendy Rhodes character and if they said it was based on me, I would sue them. But that's me.
Well, Doc, we can see you walking around in leather. It's okay,
All right. Exactly.
I don't know. 3-minute lover. I don't know.
That's right. Take a walk on the wild side. All right.
And we do love the show. We've had people on from the show and somebody who consults for them, but we have to, hey, we're traders, we have to give everybody our.
Oh no, we love the show. Yep. No, barring that, we love the show, man.
Yeah.
But I will say this, the person who you're referring to is Denise Shull.
Yeah.
And she's done some good work on mindset and how the brain affects our trading decisions. And I do encourage people to look into her work.
Definitely.
All the hype or whatever, all the issues with the show, notwithstanding, she does some good work.
Absolutely. Yeah. Shout out to Denise for sure. Like her work.
There's some really good people in the trading psychology world, and I encourage listeners to check them out. There's Alpha Mind.
Yes, we had him on the podcast.
They're active. They're active. The two of them are active on Twitter. And you have Ivan, Trading Composure. He's active on Twitter. There are a number of people who are putting some good stuff out there. He's very much into meditation and actually has a background as a Buddhist. So, there's just lots of good people. And that's why I love Twitter for. You can see who you respect and then see who they follow. Right. And you can follow them. And pretty soon you've got a network of people who are putting out some pretty good stuff.
Definitely. I mean, Twitter is such a great resource. And that's what I try to tell people, but people want to go on there and argue with each other. People want to go and, talk politics. It's like, it's such a good resource if you use it the right way.
Exactly.
Yeah.
If you know a really smart person who does great work, and then you look at who they link to, who did they follow?
Yeah.
And then you check them out, and who did they follow, and who did they link to? And so, in a relatively quick period of time, you can build an intellectual network, and you can also meet some great people, which I have, and that's fulfilling in and of itself.
No, it's incredible because I think, like, doctor, how many people of past ages would have loved to have that? Like, I can literally go on. I could see what you're looking at the moment. Maybe an article that you link to this.
Definitely.
It's incredible. It really is.
Yeah, it's an amazing resource. When I was learning how to trade, you'd have to go and find a trader, and then you have to go and spend money and take them out, buy them drinks for them to tell you some secrets. That's how you used to do it in the old days.
Right.
Mm-hmm.
It still happens on the sell side.
Yeah.
Just saying.
Good old days.
Yeah. So
good old days. Absolutely. But I really appreciate the opportunity to speak with you guys. And, I think it's great that you're doing the podcast and educating both the home-based individual trader and also professional traders. And it's a worthy effort.
Awesome. Well, we really appreciate that, Doctor. And so with that, that's going to conclude today's episode of Confessions of a Market Maker. If you guys enjoyed the podcast, please rate and review it for us. If you guys want to learn how to use market profile, trade futures, come join us at microefutures.com. And if you trade equities and you would like to collaborate with exquisite trading minds, we also have a new room that we just opened that I'm part of, equitiesetc.com. Doctor, let the people know where they can find you and anything else you'd like them to know.
Yeah, so the Trader Feed blog, TraderFeed, traderfeed.blogspot.com. That's my blog site, and a lot of my work is linked there. And of course, the YouTube channel, which is the 3-Minute Trading Coach. And some nice techniques are described there.
Excellent. JJ?
Well, that was great, Doctor. Thank you so much. It was.
Well, thank you. Had a good time. Great speaking with you, and want to wish you a lot of luck with the podcast going forward.
Thank you, Doctor. We appreciate you. And so, for the good doctor, I'm Harold. He's Kumar. You stop, so.
Be good.